Samvardhana Motherson, that is SAMIL, that's a stock that we are focusing on. Not any reason why the stock is in news. The stock is seeing gains of 0.7%. In fact, I think 25% in one of the JVs is what they've acquired. But the reason why the stock is in focus in today's session is taking into consideration the kind of order book it's sitting on. $88 billion, and it's 22 times almost its revenues. My colleague Puneet is here to tell us more as to why is it so astonishing, and in terms of valuations, it's still very attractive.
Well, definitely, and that's one of the key aspects. A very big war chest for the company's order book, and yet, valuations are very cheap compared to the other players as well. And we'll just look at that in just a bit. But first, in terms of order book, the order book has grown from roughly 69 billion to 88 billion in the last 3 years itself. And that's 10 times India's auto component exports from the country. In FY25, we exported roughly 8 billion of auto exports, and that's for all auto component companies combined. That's 10 times the company's order book compared to that number, and that's been significantly increasing as well over the last 3 years. So the war chest in terms of order book as well as revenue visibility is very strong for something like a Samvardhana Motherson. When you look at the second key aspect, and here's the market capitalization of 105 auto stocks which are listed on the NSE. It currently stands at $361 billion. And when we spoke about the order book, it's $88 billion. That translates to 1/4 of the total market cap of all auto stocks listed on the NSE. So it just shows you the quantum and the size of the order book of something like a Samvardhana Motherson. When you move on and look at the third key aspect, which is the breakup of order book, it's an auto component company, so largely 97% of that comes from the auto segment. But the non-auto segment, and here's where it gets interesting, because 3% of all revenue and order book essentially is coming from the non-auto side. That translates to almost $3 billion. It's a huge number for the company. And when you look at the breakup of the non-auto side, it includes, of course, verticals like aerospace, which could be the next growth vertical for the company. Within 2.7 billion, roughly about 1.3 billion is something on the aerospace side of the business, which they already have accounted for. And the others would include something like a consumer electronic business of the company. That's a new venture that the company has gone into. And they've set up a factory in Tamil Nadu as well for that. But aerospace is 1.3 billion, and the rest accounts for the consumer electronic business of the company. When you look at the execution and the order book for the company compared to the other peers, here's where it gets interesting as well, because we've converted that $88 billion into rupees for easier transformation. 7 lakh crores is the number we get at the current exchange rate. When you compare it with the likes of Sona BLW, which is the second highest, that's 24,000 crores only. So it's a huge gap up in terms of order book compared to the other players as well. But when you look at the revenue as well, and here is where the comparison gets even more interesting, because compared to the last year's revenue of roughly about 1 lakh crore for the company, the order book is almost 6.5 times, and that's the book to bill ratio. This ratio tells you the revenue visibility of the company over the next few years, and that's 6 times the company's current revenue. The other closest one is Sona BLW, but apart from that, nothing much more than 1 time revenue, and hence the war chest. Finally, in terms of valuations as well as what analysts are making out of it, 18 times FY27 price to earnings for something like a Samvardhana Motherson. Despite the big order book, they have the cheapest valuation, and the key aspect is it operates more than 190 plants over the world. So the return on capital employed is lower compared to the other players, and hence the lower valuation. But the company is looking into a non-auto side, which has a higher valuation multiple, and hence could be very interesting going forward. Within analysts, 21 buy calls and roughly 3 sell and 2 hold calls. So most brokerages penciling in bullish outlook going forward as well. And finally, the FY30 vision. The company is now translating 108 billion in terms of gross revenue by FY30. This was roughly 25 billion in the current year of FY25, which is just completed. So that implies a 33% CAGR. So overall, strong order book, valuation in play, and brokerage is positive. That's the summary for Samvardhana Motherson.